Hello and welcome to Echo45 Advisors Market and Economic Update. In this video, we'll discuss what investors should know about the SEC's recent approval of Bitcoin ETFs. The most important thing is for investors to understand the role of digital assets in their portfolios as the industry develops and adoption of these assets matures. This is especially true in the light of many scandals in the crypto industry, including the collapse of FTX. First, the SEC's decision allows for what is known as a spot Bitcoin ETF. The word spot just means that the ETF is based on the asset itself, in this case Bitcoin, rather than a financial derivative, such as a futures contract. This is also important because ETF vehicles are generally attractive to investors. There are mechanisms to keep the price of an ETF in line with the underlying assets, and ETFs provide flexibility for investors so they can buy and sell in real time. However, it's important to understand that Bitcoin may not be right for all investors. After all, as an investment, what matters most is the impact on an overall portfolio. This chart shows that Bitcoin has been highly correlated with risky assets such as stocks over the past several years. So rather than diversifying risk, cryptocurrencies often amplify risk. Similarly, this chart shows that cryptocurrencies have been far more volatile than other asset classes during certain periods of time, such as in 2021 and 2022. So investors should carefully consider these investments in context of a broader portfolio rather than focusing on recent performance. It's also important to note that not all cryptocurrencies have performed as well as Bitcoin. This includes Ethereum, another major digital currency, but it also applies to hundreds, if not thousands, of lesser-known cryptocurrencies as well. So what matters in the end for investors is how these assets fit in portfolios. This can help investors to maintain perspective, since much of the discussion on Bitcoin centers around the future of the financial system, blockchain technology, and other more esoteric debates. This chart shows that portfolios with greater expected returns often come with greater risk. How we balance those risks across asset classes, especially those that are negatively correlated, is extremely important. Crafting these portfolios with long-term goals in mind is ultimately the purpose of any proper financial plan. As Bitcoin ETFs and other digital assets become more popular, it will be even more important for investors to understand how they do or don't fit with their plans. We hope that you found these insights helpful. If you'd like to discuss any of these topics in more detail, please don't hesitate to reach out. We look forward to speaking with you soon.